This episode is sponsored by our friends at YCharts. A typical day in the life of a financial advisor calls for back-to-back client meetings, juggling portfolio management, and the consistent desire to improve client relationships. YCharts report and proposal tools could be the missing piece to help you effectively handle these time-consuming tasks. Now more than ever, clients want to hear from their advisors. And with user-friendly templates at your disposal, generating impactful client reports can be easily integrated into your everyday routine, helping you free up time and focus on what matters, enhancing client interactions and growing AUM. Join thousands of users who rely on YCharts by leveraging personal proposal reports to truly showcase your value add. Click the link in the show notes to start your free YCharts trial and tell them I sent you. New customers only. All right. Hello and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker. If you like this podcast, it would mean a lot if you could rate, subscribe, review wherever you're watching or listening to it. With me today, I'm happy to have on for the first time, Julian Lin. Julian, how's it going?
It's going great. Excited to be here, Andrew.
Well, I'm excited because you told me I have a monopoly on single stock idea podcasts, and I just love the idea of having a monopoly on a small niche. But before we get started, let me just remind everyone that nothing on this podcast is investing advice. Please consult a financial advisor, do your own research. Nothing on here is financial advice. Julian, you reached out to me, and I'm really excited you did because, the king of the meme stocks, I don't know if it's the king, but Reddit went public was it last month at this point? I can't remember if it was earlier this month or last month. But they went public last month. The stock obviously generated a ton of interest, lots of people with different views on it. You put a great article up on Seeking Alpha, which I'll include a link to in the show notes. And you said, hey, I want to come on and talk Reddit. And I said, look, I'd love to talk something a little different. So the company we're talking about is Reddit, just went public. Ticker is RDDT. And I'll toss it over to you. What is Reddit and why are they so interesting?
So Reddit is a social media platform. I'm sure many listeners are familiar with it. But to me, the interesting point here is that it's just because it just came out. When you think about the timing as it came out, it's coming during a time when the market is clearly quite frothy, especially the tech sector. And so when you have a company that already before it came public, people already thought of it kind of as a meme stock just because Wall Street Bets, the home of the meme, is hosted on Reddit. So it comes out as a meme stock, comes out during a frothy market. It's very easy to just discard it, right? But whereas I'm viewing this thing and I'm seeing a company that arguably has a stronger business model than Meta, we'll talk about. And the valuation is quite compelling here. But meanwhile, there's a 5-month IPO lockup period. So that's just kind of the quick teaser there for Reddit.
Let me start with a few things. So I think the most frequent bear case is going to be, and I probably kind of fall into this case, like, look, Reddit, you look at 2023, they're still burning cash flow. They're EBITDA negative, and that's adjusted EBITDA. So it ignores 50 million in cash comp, and they're coming public at, I think it's about a 6 billion-ish market cap right now, $1.5 billion of cash on the balance sheet. So a lot of cash, but we're trading at a big multiple. It's under $1 billion in revenue, big multiple, cash burning. It's been around for a long time. I think that's the bear case, and we can discuss that later. But the bull case is interesting to me too, right? Like, hey, we have seen social networks come public before, and all of them, they've tended to do well. You think about this, the bear case here is very similar to Facebook 10 years ago, Google 15 years ago, Apple iPhones, just a flash in the pan, Twitter, which, it kind of worked out well in the end. But so I guess I just want to start by just forget the trailing financials. We'll talk about them. What is the bull case? Like, what do you see when you say, hey, this is stock I want to go long. This is stock I think I can generate alpha investing in. What do you think the bull case here is?
Yeah, and I'm sure we'll go more in depth, but just very quickly, I guess the reason why this is so unique is I'm viewing it as a clearly under-monetized company. I think you've talked previously about some quality bubbles, sort of like Costco. I wasn't there, but Costco. There are some critical reasons. And it's not about Costco, though. Some critical reasons why Costco stock is so expensive. It's under-monetized. It's very similar to a Chipotle stock, an Amazon stock. You got these names that they look expensive on the current multiples, but the reason for that is because they're just under-monetized. They're not making as much money as they could be or should be. Reddit is, in my view, clearly of the same. It has a huge user base. And as we'll discuss later, much of that is critically in the United States. For these social media companies typically their highest average revenue per user comes from American users, just flat out. But more than half of Reddit's user base is just in America. That's very unique compared to
why is Reddit. So that was one of the things that jumped out to me. Why is Reddit space so domestic focused? Because look, I understand they're building communities and you need to meet community, but one of the ones I think they lead off with is like in one of their S1s or something is a Game of Thrones community, right? Like a Game of Thrones community is going to travel pretty well between here versus everywhere in Europe. They do international dubs. Squid Games community is going to travel really well in South Korea. I was really surprised. Like there's 300 million, 350 million people in the US. There's 7 billion worldwide. I was surprised how US focus is. What is it that kind of got the flywheel rolling in the US, but not internationally?
So I would say it's combination of two things. One would be Reddit's very English focused, and I would say perhaps prior to generative AI, it's not just so seamless to translate English into a different language. I'm sure a lot of listeners probably use maybe something like Google Maps, and you would see maybe some translated reviews of if you ever hit an Asian restaurant, you might see some translated Chinese reviews or translated Korean reviews, and you're like, I mean, it's pretty good, but I mean, I can tell it's translated. So if you already could have that feeling when you're looking at a Google Map review, when you're trying to on a social network, an American post is probably not going to translate culturally international. So that's the first bit. The second bit is definitely, it's also very similar to the under monetization bit. There's some mismanagement here. There's a clear difference in terms of the management teams of a Meta platforms versus Reddit. Besides the under monetization, they're probably not pushing as hard as they should be internationally in terms of just executing and entering these markets. You're going to have to hire some people to create some posts and so forth. There is some mismanagement here as well.
So I want to go to one thing you said right at the front there. So is generative AI, I mean, we can talk, they're starting, one of the bull cases is actually they have a huge license deal, I think, with Google for learned machines, but we can talk about that later. Just on the generative AI piece, is that a bull case for Reddit? Like as AI gets better, learned language models get better, like my English posts translate into, my wife's in the background, so I'm saying Polish or Chinese or something, it kind of opens up the communities more?
Yes, I haven't seen this written anywhere, but this was something that I had viewed just because their lack of international, exposure, it's an opportunity, but it's also a risk where it's like, why haven't you already created these communities internationally? So I view generative AI just because it's, very good at translating as being a potential catalyst, at least in this respect. But beyond that, when we think about Meta, I'm just take a couple of years back. Meta, 2 years ago, I believe, everyone hated Meta. First of all, tech stock trashing, but Meta specifically, we were worried about TikTok. Now, no one talks about TikTok, but I might remind investors, and I am a big investor in Meta. I'm saying this, TikTok still exists. The competition from TikTok has not disappeared. The only difference here is that Meta they've really executed on their artificial intelligence, not necessarily generative AI, but artificial intelligence to improve the quality of their feed, right? They were facing issues where they could not track your apps, besides Facebook. You cannot track your Google searches anymore for the younger generations. And they're facing TikTok competition. So growth is slowing. But now that they've used AI to boost the content of their feed, growth has returned. That doesn't mean TikTok competition has disappeared, but that does indicate kind of the benefit that generative AI could have for a platform like Reddit. And adding to that, it's important to note that I don't view Reddit as having that same TikTok threat, just given that it's fulfilling a different niche than a Facebook. Whereas Facebook, Snapchat, TikTok, they're all competing for the same market there.
No, it's a great, like if I wanted to go, Way of Kings. I don't know if you read fantasy books. I love fantasy books. Anybody who reads the blog knows I do fantasy books. And one of the best of all times is Way of Kings. And unfortunately, it's been 12 years since the second book came out. We're all waiting on the third book. But there are all these theories and stuff. And when I read the second book, like what I did was I typed in, Way of Kings. Sorry, this is Kingkiller Chronicles. Kingkiller Chronicles, second book or whatever. And there's this whole Reddit discussion. And like, if you're a startup social network, that's that's, people talk about Threads trying to recreate Twitter and how difficult that was and how ingrained that social network got in. That's almost trivial compared to, 10 years of fan theorizing on King Killer Chronicles and what's going to happen next, like recreating that social network. That is really hard. And these things are Wall Street Bets going and recreating the communities there. Like, it's not only got the community, but unlike Twitter, where people are just responding to the day's current events, and that's a very powerful social network. Now, monetization is a question, but that's proven very powerful, right? Threads couldn't do it. A bunch of things couldn't do it. With this, it's not just, hey, you've got the communities, hey, you've got the up to speed. You've got 10 years, and a lot of these things you want to go back and reread the 10 years worth of posts, or, we'll probably talk Google search results later. But as you and I were talking, I was looking something up, and Reddit was, 1-year-old Reddit posts were popping to the top of the Google search results. And this was, right before we were taping, and this was not for something podcast related. I was looking up something else and was just getting old Reddit posts. So it just shows how powerful, like, it's social network plus historical data. That's a very powerful combination. I'll let you comment on anything you want to say there.
Yes, so I think kind of alluding to what I mentioned before, where you got Wall Street, all these very, very experienced, respectable investors just ignoring Reddit because it has this connotation with a meme stock, right? But again, when you think of a typical meme stock, you got Carvana or GameStop or AMC. You got these names going out of business. But as you mentioned, Reddit,
I'm just going to say, I know one passionate listener. I'm not sure if he's going to listen to this episode, but saying Carvana as meme stock and going out of business, he's going to take great offense to comparing it to GameStop and AMC. Probably rightly so, because while it is hotly debated, I don't think they're going out of business. I think that risk's in the past, but I'm just saying that for the listener. I'm sure he'll pin me on the back end.
No, this is a fair point. It's not 1 year ago where they're facing liquidity issues, and you could argue that they have more secular growth than maybe AMC and GameStop. But they're kind of in the same vein, where at least they have a ton of debt. You got these names, they either have some business model issues, a ton of debt, growth is kind of iffy. Reddit does not fit in there, despite the fact that everyone seemed to believe Reddit's a meme stock. So when you talk about this business model, yes, if you were to Google, like for example, tax day just passed. I had some questions on taxes. Believe it, when I went to search on Google, in the past, maybe you might look at TurboTax forums. They're not so useful. But where is the most valuable information? It's going to be Reddit. Reddit is going to have the most valuable information for everything, kind of alluding to what you were saying before about replication. Yes, so there's not the competition here, or the barriers here is not technological, at least not yet. Like if you think about Reddit, it's just, and this is a typical bear case, which I believe is quite lazy, it's just a forum. Okay, so people might think, oh, it's just a forum. It looks very cheap. It looks easily replicatable. This is true. I would imagine the tech behind this is not that great. No knock to the people at Reddit. But the key here is, as you mentioned, the network.
I remember one of my friends who isn't a programmer. He said, oh, Twitter, I can recreate Twitter in half a day. Like, as you're saying, cool, you can recreate Twitter. You know what the hard thing is? Getting the users on board. Like, this is very network effect. Please continue.
Yes, and go beyond that, so you might have these small forums related to, let's say, a dog in California, like dog lovers in California. You might try to have one little Facebook group or one little forum, but to scale that, it's going to be very difficult. You're not going to be able to expect much ad revenue. It's going to be very hard to create this kind of competing forum against Reddit. If you would forgive me, I view Reddit as the one forum to rule them all. Sort of, it's got every single forum for every single region, for every single topic in the same place. So if you're going to go create a new forum or join a new forum, it's basically consolidating all the forums to go to Reddit. I think that's
let me just ask a question on that. So that is an interesting one, because I could, on one hand, I could see that, right? Where it is one forum, and I think there's a line in the S1 about the average user after 5 years on Reddit has joined approaching 50 forums like they subscribe to, right? So I could see how you've got the network effects. But on the other hand, I could see you're really subscribing to Reddit's there is what you and I talked about where we Google, Reddit's at the top and you get some information from Google, but you're really subscribing to Reddit because you are passionate about a community and you want to talk on a daily basis. I'd imagine something like I'm a big WWE fan. I go to Reddit so I can be involved and be posting theories on, hey, is The Rock coming back for WrestleMania? Who's going to win? That type of stuff, right? That I could certainly see that. But if I'm a big WWE fan, I'm not sure that having a Reddit profile, I mean, the proof might be in the pudding, but it might not completely subscribe to, oh, I'm also a huge nerd when it comes to, I'm really into tax law, right? So I subscribe to the WWE fandom and the tax law fandom. I'm not sure how much that carries over. And the reason I asked is because, like, Brandon Sanderson, I said I'm a big fantasy book lover. I went to Reddit to read a bunch of Brandon Sanderson's theories. I could imagine how people, celebrities are getting better about monetizing and building relationships with their fans. I could imagine how Brandon Sanderson, he's got a Brandon Sanderson wiki. Like, he wants to say, hey, forget going to Reddit, come here, I'll engage with you on my own platform. And that's got a lot of benefits for me in terms of, hey, I might be able to monetize it. I can build direct relationships. I can point you. And I could see how over time a risk to Reddit would be, yeah, they've got all these niches and so a lot of them aren't going to roll up. But the biggest niches, the WWE, the Brandon Sanderson, Marvel movies, they want to build their own little sub communities of Reddits. And like, there's not so much a scale where you need to join like 15 different. Does all that make sense? I threw out a huge story and
no, absolutely. And I think, and this will also be a good segue to like how I view the business model relative, to Twitter and Instagram. But first, kind of addressing what you're discussing. So the way I view Reddit is like, you go there, you're going to be very passionate about different things, some more secretive than others. But yeah, maybe you're interested in fantasy books. You're also interested in fitness. It's not so convenient to go to different websites for each different hobby. There is a lure that you could go to one website and you get everything. This is kind of the lure of Instagram, for example, or Twitter, where everything is there. Okay. So there's that advantage. As far as some people maybe going out of Reddit and trying to host it on their own, I mean, it's possible, but I think probably actually very unlikely for a couple of reasons. First, typically people they are going to Reddit and just doing some Ask Me Anythings. I think that's kind of started on Reddit, right? The AMAs, just because you get a big reach. Typically when these people are trying to do something, the most important thing is that reach. It's not really monetizing the users up front. And I can't really think of a whole lot of times where the celebrities or these business models are trying to create a forum and monetize a forum. That tends to be very niche,
Celebrities haven't, and the counter to this might be, hey, celebrities haven't, but I will say like a Brandon Sanderson or Marvel Universe, they've done some stuff, and Brandon Sanderson's at the cutting edge. He's the GOAT. But a counter to this would be, as you're saying, Taylor Swift doesn't want to run her own forum. And not only has she not done it and she doesn't want to, she might not want the issues associated with the moderation. We should probably talk Reddit's moderation at some point. She might not want the issues associated with, hey, I'm Taylor Swift. I've got 500 million teenagers who are really involved and want to be on this forum. And, 499 of them are going to be great, but 1 million of them might be trying to, do illicit dealings, or there might be 100,000 people who shouldn't be involved with the teenagers on a website who are trying to they might just view it as, hey, cool. Like, look at Reddit. They're even on negative, like they're not really making a lot of money. If I create a Reddit competitor, great. There's no real monetization thing there, and I'm going to have this huge moderation headache.
So yes, but even if they were profitable, just think about Instagram, right? Instagram, Facebook, they generated a 50% operating margin on Instagram, Facebook, the family of apps over the last 2 quarters. 50%, 52%, and I think that's low compared to what their long-term target will be. It should be higher than that. If you're familiar with what it looks like inside a tech company, it should be much higher, and they're generating 50%. Yeah, this margin is not really attracting people to create some kind of niche Instagram or niche Facebook. They might do it, and they do it. It's sort of like the Shopify and Amazon. You're still going to have your own thing. It's not going to be competing, but Instagram,
I definitely hear you, but Instagram is, there's huge scale, storage costs, everything, but Instagram is one giant thing, right? You're getting my feed. I want everything in my feed, and their algorithm serving to me. Reddit, like if I'm into Brandon Sanderson, I do not care if somebody is coming with Magna content or Game of Thrones content. Like, I don't care. If you put that in my feed, it would actually be detracting from it. So I think there is the risk where it's just, as you said, one feed to read them all, but I only care about one or two feeds. And if somebody has like better access to that, you know?
It could be, but I would counter that Facebook and Instagram used to be the same, right? Prior to them implementing the AI to run their feed, right? They used to only show you things you followed or people you followed. That used to be what Instagram, Facebook do. I think now they said
I remember those days. Yeah.
75, and that was dangerous because when Apple said you can't track stuff anymore, and when TikTok starts competing, growth stopped, and then you got macro, blah, blah, blah. So, but now I think they're saying 75%, I think it was 75% of content that you see on your Instagram and Facebook, if you're a frequent user, is not stuff you follow, okay? So I would just counter, yes, maybe some Reddit users, they might only want the Reddit communities that they follow, but I see them trending toward that Instagram and Facebook model over time. And Instagram and Facebook users have shown that they could make that transition pretty seamlessly. They're clearly still using it.
I will say I go back and forth between having Instagram installed on my phone or not. But I'm just impressed. So it knows me so well where, 6 months ago, all I was getting was workout videos. And today all I get are like parenting videos. Like it's just crazy how well it knows you. And I never put in, hey, I'm a parent. I think my wife sent me one and it started watching the feed. It's really good. Let me go to, I should mention there's this great Paul Graham article that he posted right when Reddit went public that was talking about the stickiness and the history of Reddit, which I thought was really good. I encourage people to read it. I'll try to include a link in the show notes, but I want to ask something on that. So let's go to, there are a few bear cases here, right? A lot of them would be valuation, and we can talk about that. But the bear case to me that jumped out was, hey, Reddit is 20 years old. They are run by their co-founder, right? Obviously, things have advanced, but if I looked at Reddit, I would say, okay, you had in 2020, 2021, you had the COVID boom, meme stocks went crazy, all this sort of stuff. We're in 2024 and the company, kind of still isn't profitable. MAUs, daily active users, are actually accelerating in the back half of 23, which is awesome. But, I'd kind of say, hey, if these guys can't turn a profit, like their peak time should have been late 2020, early 2021 for engagement, usage, monetization, all this. If they can't turn a profit then, like, man, is it going to be a long road to hoe? Like, shouldn't they have already been doing this? Like, why do I think this can accelerate right now? So let me turn that question to you.
Yes. And I'm not sure that was your bear case, but in my preparation for this, I called that a lazy bear case. I'm sorry. Yes, no, I saw that very, very frequent, extremely frequent, especially from some investors I greatly respect and follow. So a little disappointing. But yeah, I've heard this many times. The idea is, why aren't they profitable yet? It implies they will never be profitable. So there's two things here. One is Reddit specific, and two is just tech sector overall. Let's start with tech sector overall, though. I'm not sure. I assume, of course, a lot of your listener base is more value investor focused. Perhaps they kind of just ignored tech stocks as they crashed in 2022 and recovered. But maybe this is a good time to talk about tech stocks because, yes, tech stocks are rich again. Okay, but this is not directionally. This is not the same thing as 2021 tech stocks. There's a very important difference that maybe some value investors who aren't following tech stocks have missed. Okay, so heading into this 2022 tech stock crash, yes, valuation's big. Valuation is still big now after the recovery. But there's this notion on Wall Street that tech stocks are exactly what you said. They aren't profitable yet. You got all these companies with billions of revenues, and Reddit only has $1 billion. You got these companies with billions of revenues, not profitable, not even like non-GAAP profitable, okay? And you're like, why can't they're just never profitable. So when the tech stocks crashed, you're thinking their valuation doesn't make any sense because they're just not profitable. There's no valuation support. They just keep going down. That's what happened, okay? But what happened over the last 4 quarters, and this is important, could verify this, tech stocks across the board, right? So you get growth rates decelerating in a tough macro environment where interest rates are rising. So top line growth is going slower, which in theory should imply that operating leverage is harder, right? You can't have operating leverage without top line growth. But what happened was profits. You got these margins jumping 1,000 basis points, 20,000 basis points, 3,000 basis points. Many companies going from non-GAAP profitability to GAAP profitability. A lot of companies going from not profitable to non-GAAP profitable.
This is Facebook / Meta's year of efficiency, year of leaning. I certainly hear that, but I guess my pushback to you would be, okay, I hear that, But Reddit, I'm doing the numbers from memory, but I think in 2022 they lose 150 million in adjusted EBITDA. In 2023 they lose 100 million adjusted EBITDA, right? So, and the business actually did grow in 2023. I think it was about a 20% grower in 2023. So, cool, they're closer to break even, but that's not like that's not my year of efficiency, my year of leaning out, right? Like you grew 20% and you basically the revenue fell through to the bottom line, but I'm not seeing huge cost cuts. Like, I don't know, it's 20-year-old business. When am I going to see some adjusted EBITDA profits here,
So the idea is that these tech stocks have shown, obviously there are going to be the lemons, but the idea is, just think about an Amazon, okay? Amazon right now, no one is going to doubt that Amazon can make money, okay? But if we go even just 10 years back, people are doubting that Amazon can make money, or was it maybe 15 years? We are doubting whether Amazon can make money. They had just no profits, literally, for many decades. But what do they do? And this is not just specific to Amazon, it's every tech company. What they do is every time they grow, they just reinvest that growth, gross profits into headcount. So it doesn't look like investment in growth, but they basically just keep growing their R&D, their teams.
I hear you there, but Amazon, Amazon is growing and they're going into huge new business lines. They're building out some of the most incredible logistics we've ever seen. They're building out AWS. They're building out Alexa. They're taking a shot at phones. Like, I guess my pushback, and I think a lot of bears' pushback would be, okay, Reddit, what are you investing into, right? Like, I saw this in multiple people who commented on when I said you were coming on. R&D is, I can't remember the exact number, but R&D is a huge number here. And it's similar to the old Twitter argument. And I'll come back to the old Twitter argument in a second, but what are you spending all this R&D on? Like, it's literally the app and the website. I'm not going to say are the most like technologically sophisticated. It's one of those things people used to say, Twitter, you could run this with 4 people. Like Reddit, I'm sure you might need a couple more, but they have free moderation. And it's not like the app is like making new grounds. They're not introducing new products. Like, why aren't we seeing the year of efficiency? What are they putting so much R&D research development into?
Yes, but I guess I'm interpreting it differently here. So my point here is we're seeing the company not profitable, but that fact that they are not profitable does not mean that they're structurally unprofitable. It's the big challenge with these tech companies is that margins are not their long-term margins. Whereas when you invest in the typical value stock and the typical stocks you get on your platform, those margins are probably peak margins, if we're being clear, right? You're not going to expect these margins to go up, 20%. They tend to be kind of very mature businesses that they've already tapped out in terms of all the cost cutting, for example. They already cut all the fat out. This is important, right? You got these very efficient, streamlined businesses, cut the fat out. They've already leveraged their businesses to the core, all right? And so margins are going to be flat at best. Maybe they go up a little bit with inflation, right? That's the typical non-tech model. But what my point here is with the tech, and we can verify by looking at many of the companies, that's not the case. What they're doing is, it's hard to say because they're not profitable, so they're structurally unprofitable. But it's hard to know if they're actually choosing to be unprofitable in order to invest aggressively. There's a big difference between.
I hear you, but I'm asking what is Reddit investing into, right? Because again, I think the bear case, some of the bear case I saw a lot of questions. They're investing all this money into R&D, and I look at the website and the app, and I'm like, this is a business that there used to be the question with Twitter, what are you spending $2 billion in R&D on? I look at Reddit, I'm like, what are you spending all this money in R&D on? I understand investing into growth. I just don't understand what they're investing into growth.
Sure. And I don't think anyone besides the Reddit team will know that answer. But my point here is that as investors, right, the key thing to focus on is not the fact that they're unprofitable and they've been investing so much in apparently this very basic forum. It's more, or let's take Twitter, for example, right? You look at Twitter, I know that you are also an avid Twitter user. The experience it's a little different, but it hasn't degraded necessarily from maybe prior to Elon Musk taking over. But it's very famous to know that Elon Musk, laid off 75% of the team. So the idea here is just how you interpret the data here. So we got Reddit spending all this money on R&D. We don't know what it is. We could either say, oh, that means they're structurally unprofitable. Or you could think, look at what Elon Musk did with Twitter. It could mean, yeah, there's a lot of fat to cut down here, and the business will still be just exactly the same. I'm not advocating for that. It's also possible they're investing in other growth stuff, but the idea here is the fact that they're not profitable yet is not necessarily indicative of them being structurally unprofitable.
This episode is sponsored by our friends at YCharts. A typical day in the life of a financial advisor calls for back-to-back client meetings, juggling portfolio management, and the consistent desire to improve client relationships. YCharts report and proposal tools could be the missing piece to help you effectively handle these time-consuming tasks. Now more than ever, clients want to hear from their advisors. And with user-friendly templates at your disposal, generating impactful client reports can be easily integrated into your everyday routine, helping you free up time and focus on what matters, enhancing client interactions and growing AUM. Join thousands of users who rely on YCharts by leveraging personal proposal reports to truly showcase your value add. Click the link in the show notes to start your free YCharts trial and tell them I sent you. New customers only. So, I mean, that is an interesting, because Twitter for years, people would say, and I think this is right, like you'd love to see, and Elon's kind of done that, like you'd love to see Twitter in a private equity model, right? Where it's like, hey, why are you guys investing all this R&D? Like just cut everything, run it as the core product. The network is really powerful. Let's see how high you can get these margins.
Wait,
right?
and that's what I don't know if you're familiar, but he did cut 75% of the.
And Reddit would be kind of interesting. Like, let's say they're going to do roughly $1 billion in revenue this year. Their gross margins are off the charts as they should be because they've got, the moderators are free. I would imagine if you private equity style cut this to the bone, you could run this with 40, 50% EBITDA margins. I don't think would be crazy.
Much higher.
So I know people thought Twitter could get up to like 70% if you really cut. So let's just say 50, $1 billion revenue, 50% EBITDA margins. That's 500 million in EBITDA. We're buying this for about a 4.5, 5 billion EV, 6 billion market cap, but $1.5 billion in cash. That's a 10x EBITDA. Like that's a pretty interesting thing. Now we've cut everything. We're probably looking at much lower growth because we cut everything. I don't know. Bears might argue, hey, Twitter, you grow these things on the strength of the community, not the strength of the R&D, but that is a pretty interesting thought. Do you want to say anything on that, like
yes,
private equity burn model?
But continuing, and that's very important in how tech stocks are valued. This idea of long-term margins, and when we discuss valuation, we'll definitely get there. But I realize I've been saying a lot about like, oh, Reddit could be super profitable, but let's just talk about current financials. So there's kind of a direct kind of rebuttal to this idea that they're super unprofitable. If just look at their quarterly results that I have in front of me, we can see that, yes, they lost, was it $90 million of net income last year. But what the Bears have not, don't appreciate enough is that if we look at the operating expense over the last couple of quarters, ever since December of 2022, you got R&D flat, right? You got sales and marketing flat. You got general administrative up a little bit, whatever. So all while, they're growing at a 25% rate, revenue growth is accelerating. This is the same kind of cost discipline we've seen across the entire tech sector. Every single tech stock in general have undergone this kind of cost discipline. Just run the numbers here. So like if presumably, I don't assume that once they come public, they're suddenly going to become spending on everything, but you just assume 5% operating expense growth. They're going to benefit from a recovery in the macro and the ad market. They're within 1 year of, if they wanted to, 1 year of GAAP profitability. So you got these bears saying that they're still not profitable, but actually no, they're very, very, very close to GAAP
I guess
profitability, extremely close.
So we'll go to valuation in 1 second, but I guess the other bear case I would make is, look, if you invested in Meta or Google, like these were killer stocks, right? Meta is the end all be all for investing in a social network, right? But the tier 2 social networks, and here I'm thinking Twitter, Snapchat, maybe Pinterest, like, I've got the Snapchat chart pulled up right now. And if you had sold at the top in 2021 when it was approaching 100, like you did pretty well. But aside from that, Snap's at 10, right? That's way below its IPO price. Pinterest 33, kind of close to its IPO price. And these IPOs were 5 or 6 years ago, right? Like outside of the major scaled players, investing in a social network hasn't done great, right? And I just want to ask, like, what is, and I think I'm not saying that the other guys are perfect comps, right? Twitter, Snapchat, Pinterest, nobody's out here saying like they didn't have strategic missteps and stuff, but that is three highly touted, highly visible social network issues that are comps, and all of them didn't work. Twitter kind of worked because Elon took it out private at a premium, but if that was still public, I don't think anybody'd be happy with the share price now. So what is it about Reddit that like kind of separates them from those three kind of failed cases?
Yes, and this is very, very important here. So, but before we answer this, let's think about Meta, because I think at this point, even value investors like Meta, which is kind of interesting. So let's talk about Meta, though. I pose this question: what if Meta was not making this much money? Okay, what is it we like specifically about Meta? Is it like, are they making money because of their network, or because advertisers are just there? Like what if for some reason they were making half as much as they are now? Are they really half as valuable as they are now with the current network and user base?
I think the answer would be yes. I mean, maybe not half as valuable, but if they were making half as much money, right, with the current network, then you would have serious questions about, this is the old Twitter thing. You'd have serious questions about the monetization potential. Twitter is an incredible product in terms of consumer surplus, but the questions are monetization, right? It just does, it flat out does not monetize well. Whereas Facebook, like the beauty of Facebook, particularly Instagram, is it is the best monetization platform outside of maybe TikTok I've ever seen. Like I almost prefer the ads on Instagram to the normal stuff I get on Instagram. Like that's how targeted it is, and that's how good the advertising platform is. Whereas Twitter, you're just scrolling through. I want to see my feed. I don't care about the random GM ad that gets promoted in there. So if Facebook was making half, like I think I understand where you're going, but I would say like, hey, we'd have to have questions about management competence, or it would be making half because the Instagram fit just wasn't as good as I laid out. It's closer to Twitter. Does that make sense?
Well, I mean, I could understand if we're just focusing on the multiples. Yes, like if it makes half, it will be. You might think it's worth half on an earnings basis, but my idea here is if we have this hindsight that it should be monetizable. This is what I'm saying. Like, let's say there's mismanagement.
Well, then you're talking about what if we went. Then you're talking about what if we went into a deep ad recession, right? Like we're going into a depression, and we've seen advertising businesses ARPU go from 2 to 1 because hey, this is a familiar thing with TV networks, right? TV networks in 2024 presidential year, they make tons of money because they've got presidential ad. 2025, they don't like. We can value through cycles and stuff. We can look through a recession. Now, the stock's probably going to go lower because we're in a recession and all the multiples go lower. But I hear what you're saying. It's just two different things. Like we're kind of talking recession versus, hey, what if they just couldn't get everything going?
Well, what I'm saying is like Instagram, let's say you went back in time, so that Instagram is this monetizable, but it's not monetized yet. Let's say the management team was just not great yet. It's not yet monetized. Would you invest in the stock when it had just 10% of the revenue?
That is an interesting question, because one of the first things for me as an investor that like kind of took me on an evolution was back when Facebook bought Instagram for $1 billion, and people made so much fun of Facebook. They were like 33 people. Instagram had 33 people and 0 revenue at the time, and people made fun. And I remember reading these, and I was like, these people are insane. Like, my girlfriend at the time is plugged onto this thing 24/7. Like, okay, yeah, it makes no revenue. It's not like they're not going to put revenue up there, like put their engagement up against what Facebook's doing. And I had an inkling. I didn't know how good that would be. I had an inkling it would be a very monetizable site. Thought they were crazy. So what you're kind of saying is, what if something is pre-monetization? But if I apply that to Reddit, I would push back and be, hey, Instagram was a 4-year-old company that was pre-monetization. Reddit is a 20-year-old company, and I believe they relaunched their ad server in 2018. So either they've been trying to monetize for 20 years, or they've been like really trying to monetize for 5. But we're talking about like kind of apples to oranges, what they are. Like, why aren't they what I'm seeing now?
I think the mismanagement at Reddit is perhaps bigger than maybe at Instagram, because like you said, maybe they're only 4 years. But let's say Instagram was around for 10 years and they were managed. But and as you mentioned, like when they were bought, everyone was on Instagram all the time. But would that really change your opinion about whether or not Instagram could be monetized? They're mismanaged, yes, but that instinct that you have, it should be monetizable.
Are you arguing Reddit's mismanaged?
No, there's argument. There's very, very clearly mismanaged. And also, it shows in the numbers. When we look at like average revenue per user and everything like that. But yes, they're very clearly mismanaged. Especially the Tasty Life CEO is an investor in Reddit, and in his interview, Tom Sosnoff, right? In his interview, he mentions that coming public could actually help this management team, and that it forces them to be better at monetization. But yeah, it's very clear that the Reddit team has not monetized nearly to the extent as a Facebook, Instagram. But kind of let's talk about here, why did Snapchat, Pinterest, even and Twitter actually? We shouldn't ignore the Twitter stock price would be much lower if they weren't taken out by Elon Musk at some insane multiple, right?
Twitter is the example that really that I think is really interesting versus Reddit. Now, I think Reddit's network is actually better than Twitter's because you're building these deep communities. And Twitter, nobody cares about last week's tweet, but as I mentioned earlier, people care about last week's Reddit post. But Twitter they had all this engagement. It was very difficult to supplant. ESPN would come, breaking news, Andrew Walker tweets, I'm signing with the Mets. They had all this attention and they could just never figure out how to monetize it, right? Because ads really don't belong in the Twitter product. It's just really difficult. They've tried it's really tough. Reddit has a lot of similarities to me. When I go on Reddit, if I'm looking at my Brandon Sanderson or my Marvel spoilers or whatever, I want to read that. And then halfway through, there's a post for Robinhood will make sense on Wall Street Bets. But, halfway through, there's a post for a movie coming this week that I don't care about, or there's brand advertising for some food. And it strikes me as not a great medium for advertising. I think that's the big issue they run into.
But I think that's more mismanagement. And let's just talk about maybe more higher level about Reddit, social network versus Facebook, Snapchat, everything. So I think, and I think Pinterest is a good example because, especially with both men here. So Pinterest is very, very much loved on Wall Street. It's got a nice, attractive 7x sales multiple. But I think that's emblematic of this idea that Wall Street tends to focus so much on current profits. And I mean, Wall Street's forward looking, but we're very addicted to profit. All investors are very addicted to profits. We see Pinterest making so much money and we're like, oh, this is a great high quality social network. I even saw some bearish takes saying that Pinterest has higher engagement than Reddit. I think people who really use Reddit will kind of laugh at this idea. But this is very, very typical of this idea that, because they're so profitable, they're going to be much higher quality network. I
can't speak to that, but it does strike me as Pinterest, visual medium is easier to advertise than textual medium. So isn't there something to Pinterest? I know people put it together. The classic is what people putting together wedding boards and stuff. That's visual medium. Isn't there something to just a visual medium can monetize better than a textual medium like Reddit?
I'm sure to some extent. But Reddit does have pictures as well. But so the key difference though with Reddit is I'm viewing it. So look, one of the reasons why Instagram is so important is that it allows you to explore your interests, explore your passions, right? It helps you know what you love, right? And Twitter is very similar, except it's got this. It appeals to the low attention that we have. Sometimes you don't want a whole picture. In one cell phone on Instagram, you might get 2 posts, 1 post at most. But with Twitter, you might get 5, right? Because they're text. Reddit is kind of like the best of both worlds, where you get to focus on your interests, but you got that text. Sometimes there's text. You got the convenience where there's a lot of posts in one page, but it's got something different where how do I put this? So it's more organized, right? Twitter, Instagram, they're not organized. If you want to organize based on, I like baseball cards. Whenever you post a baseball card post on Instagram, you have to actually type in a hashtag, a tag. With Reddit, you don't hashtag anything. Everything is already organized there. But here's the key idea here, right? So Apple and Google, they're moved toward this idea that you cannot track data outside of the app. And I mean, for me, I allow Facebook to track my data because I was born into it. I like it. For the younger consumer, they don't know that it's so great for you to allow Facebook to track. So in general, they're not allowing Facebook to track everything. So if you have this question, you're like, I want some reviews on what's a good vacuum cleaner. You don't go on Instagram. How do you even ask that question on Instagram? You don't. You go to Reddit, right? So this is where it's very clear to me that there's some mismanagement where Reddit has much more valuable data and much more valuable user base experience.
This is the old Google search thing, right? Like the great thing is people have opted into, right? So your vacuum cleaner thing, you could imagine a Reddit/vacuum cleaner board, and Dyson and Shark Ninja and all these guys should be just all over this in terms of advertisements, right? Because that's where people who really want vacuum cleaners are going to go. I could imagine my Marvel board that I mentioned earlier, every time a new Marvel movie is coming out, it should just be overloaded with Marvel advertisements, buy movie theater advertisements, buy your tickets here. And to my knowledge, it's not. So that is great. Right. Like, as you said, in the post ATT world, it's about as short of somebody Googling how to buy life insurance on Google, this is about as good as you can get in terms of monetization opportunities. So that makes sense. Let me just quickly go to valuation, right? You mentioned Pinterest. I think Pinterest, Snapchat are the two comps that I've seen. Pinterest is at maybe 5 times revenue. Snapchat is at 2.5 times revenue. I think, Reddit, they're currently trading about correct me if I'm wrong on any of these numbers, about a 6 billion market cap. They should approach about $1 billion in revenue. So you're talking about 6 times revenue. We kind of laid out the private equity take-up math, but how do you think about the valuation here?
Yeah. And this might be a longer discussion because again, I assume a lot of your listener base don't really value tech stocks all the time. But just clarifying with Reddit, I'm using 200 million shares outstanding, which is probably going to be the high mark for any financial firm. So I have it valued at around 8 billion. But even
okay.
then,
their
I'm
S1
seeing good valuation here.
Yeah, their S1, I think I was excluding. They've got like 20 million of RSUs and options that I was excluding.
Yeah,
so
I was just
that's great.
Everything.
Fine. Let's use 8 billion. That's fine.
When I just include everything. So first, when we talk, let's first talk about Snapchat, Pinterest comparisons, and then we'll talk about like tech sector valuations. But okay, so Snapchat, we have to understand. Yeah, this is kind of a very bearish take on Reddit. They put it into the social network and they're like, oh, it's not as profitable as Meta, so it's not going to be valued at Meta. Then what do we have left? We have Snapchat and Pinterest. And we're like, okay, we're going to lump it over there. It's not clear if it's better, so it's overvalued relative to Snapchat, Pinterest. But there's very important distinctions here. Again, and it all comes down to TikTok, and then also, and Pinterest is not really a TikTok. Pinterest has some specific issues. But let's talk about TikTok. TikTok has affected Meta and Snapchat very differently. This is important to understand. TikTok is a literal, okay, I don't use TikTok, I don't use Snapchat, but from my view, my humble opinion, it's a literal Snapchat copycat where it's better than Snapchat. They overlap completely, all right? There is no reason for Snapchat to exist as TikTok keeps going bigger and bigger. So, and Facebook does still also face TikTok threats. And then when we talk about Pinterest again, I view it's being monetized. Advertisers recognize that people that are very highly engaged, they really want to buy something. So they have done an excellent job. This isn't a case where you have an average business with an exemplary management team that has come to monetize this. They got Amazon in with third-party ads. I mean, if you told me 10 years ago Pinterest would be making so much money, will be GAAP profitable, I would be like, I'm not sure. But this is clearly a case where you got like an average baseball player. You slap him with, you give him a ton of a great team, a great everything, great nutrition plan, and then he becomes the best he could be. That's what Pinterest is, okay? But where does Reddit fit into this? Reddit does not face TikTok threats. This is very, very important distinction. In my opinion, it should be worth more than Meta, but it's not going to because, again, investors really care about profits. They're mismanaged. But
hold on, did you say you think Reddit should be worth more than Meta?
Yes, we'll get there. I realize
like
Meta. I was going to be laughing, but no, on a multiple basis. I'm not saying it should be worth $1 trillion. On a multiple basis. Okay, on a multiple basis. This is but let's first talk about how to value a tech stock before we just start talking about price to sales. It gets a little weird. Okay, so we talked earlier about this idea of long-term margins. You call it private equity, but it's not really necessary. I mean, when private equity comes to a tech firm, the margins are going to be even higher than what I'm targeting. But let's take a Microsoft, for example. Microsoft is a really good example of why, and this is in general, at least in my view, how tech stocks are being valued. Okay, so you got on Microsoft, they're generating around like a 35% profit margin, net GAAP. GAAP net margin. Okay, so they trade at 13 times sales, and it's kind of interesting. So these names are all very institutional backed. We just accept this, right? Microsoft 13 times sales, 35 times earnings. But you get this idea that this 13 times sales multiple, it's just accepted because they're at 35 times earnings. All right. But Microsoft is not going to have as much margin potential in terms of expansion as a company like Reddit or a smaller name. The idea here is, in my humble opinion, a lot of these tech companies, especially the ones with long-term secular growth, they're all approaching that number. Okay, maybe they're not 40%, but remember, Facebook is at 52% operating margin for their advertising business. And let's talk about Reddit. As you mentioned, we're like, what are they spending R&D on? Okay, this is important. Correct. I completely agree. This is a forum. It does not take that much money to do. We don't know what they're spending it on, but we could pretty easily say they do not need to spend this much money on operating expenses to just run this business. They're doing something else. Who knows? Who the heck knows? Longer term, it's reasonable to expect Reddit should be a more profitable business in terms of margin than a Facebook, Instagram, just because it's much easier to sustain. However, we're not going to assume that. But I'm just pointing this out. Like, it's not a crazy assumption to assume that this platform, which is much easier to maintain, should be a higher margin business. But I model around 35% margin long-term assumption for Reddit. Okay, that's what I use. But it probably will be more like 55. It probably will be even higher. But I'm going to be crucified if we actually go that route now.
I don't disagree that you could get this to crazy margins in the long term, right? Like, I look at this and I say, very similar to our Elon Musk discussion, we could cut a ton of fat out here and have this. And I do think there is something to a community-based, text-based. We've talked about the network. I'm completely with you on all of those points. 35% margins, 40% margins in the long run. I guess my pushback here, I can see where you're going. My pushback here would be, okay, Reddit right now, it's 20 years old, right? We haven't gotten there yet. We're growing about 20%. And you use Microsoft, right? Microsoft is growing 15% annualized right now. So Reddit is growing slightly faster, but Microsoft's net income margins are 35% right now. And Reddit is, I mean, maybe they'd get there in 3 years if private equity took them over, given that they're a controlled company and they just went public. I can guarantee you they're not getting there in 3 years. So when we start throwing these multiples around, I say, hey, we're talking like 10 years out into the future, long-term margin rates. They're going to burn cash to get there. And I'm just like, I don't know. Like, the valuation here it's pretty big.
Well, hold on. So around the burn cash point, no, I don't think they're going to burn much cash to get it. First of all, they have $1.5 billion of cash, even if you just take GAAP, okay? And they don't have CapEx requirements like Meta. This is important. So even if we take GAAP, right, they did 90 million of losses last year. But this is going to narrow. This is going to narrow really fast. I see them being GAAP profitable if they wanted to within a year, okay? But probably they're going to take their time and it'll be 2 to 3 years. And they're not going to burn cash, but I understand this idea that, yes, Microsoft is currently profitable, absolutely. And they're generating similar growth rate. We'll talk about the growth rates. So they that's why they're at a multiple now, okay, where there's 13. But in this bull thesis, all right, Reddit is going to, and again, there's a lot of assumptions. There's always these assumptions. We're assuming Reddit gets to, let's say, 35% margin, okay, long term. In this world that they're 35% margin, they are going to be an established social media platform. So they're going to be viewed like Meta. They're not going to be viewed risky anymore. They're going to be trading maybe 25, 30 times earnings. That gets you to 10 times sales. All right. So you get this idea that at some point in the future, when they are at 35% net margin, could we agree that maybe they'll be around 10 times sales, if not more? Because remember, they might have a higher profit margin, and Microsoft is at 13 times sales. If we assume that they're around 10 times sales, what happens from here to there, right? And we need to talk about the growth rate. But if we're assuming this 20%, and I realize we need to talk about that growth rate, but I'm seeing 20% growth for a very long time. You see them; they're currently at 8 times sales. They're lower than that 10 times sales long term multiple. Okay, so 8 times will go to 10 times long term, and then they're also growing at a 20% rate from here to there, you're seeing a name that will compound that 20, like in terms of shareholder returns, compound that 20% every year over long term.
Look, I see the thread that you're trying to do. I guess just, I look at it and say, I think they can do 20% revenue growth, right? Like, I think there's a big community out there and they're just starting to do this. I think there's a lot of untapped upside on the monetization potential, but just getting to that, you know, it takes a long time of 20% EBITDA growth to scale into their.
Oh, careful. Okay, wait. To be clear,
sorry,
I'm not saying 20% EBITDA growth, 20% revenue growth, and we're talking about scale. No, it's so I do encourage afterward to check out some tech companies to see what they did. Check out even Salesforce. They weren't even the most. Check out how much their margin expansion was in just a year's time. No, it's not like so. I guess
I certainly understand that these guys can cost cut. Like
I'm not saying cost cutting. I'm not saying cost cutting. Like so, let's be clear. I'm not saying cost cutting here. I'm saying operating leverage. So I'm saying what we're going to see here is operating expenses grow minimally, very slowly. When you have a situation where operating expenses are not really this is really what Facebook did cut, but the big portion of why margins grew was because if you just leave operating expenses flat while you grow revenue, the margins expand very, very, very rapidly, especially when your gross margins are at like 90%.
This episode is sponsored by our friends at YCharts. A typical day in the life of a financial advisor calls for back-to-back client meetings, juggling portfolio management, and the consistent desire to improve client relationships. YCharts report and proposal tools could be the missing piece to help you effectively handle these time-consuming tasks. Now more than ever, clients want to hear from their advisors. And with user-friendly templates at your disposal, generating impactful client reports can be easily integrated into your everyday routine, helping you free up time and focus on what matters, enhancing client interactions and growing AUM. Join thousands of users who rely on YCharts by leveraging personal proposal reports to truly showcase your value add. Click the link in the show notes to start your free YCharts trial and tell them I sent you. New customers only. Let me ask, so a big piece of this is 20% revenue growth for a long time, right? They did 20%. They did 20% in 2023. They did 20% in 2024.
Yeah.
Like I guess the push
25% last quarter.
Yeah. The push pull is this is a 20-year-old company, right? Again, I think there's under monetization here, but most companies don't see accelerating revenue. Most companies, as they kind of go from 800 million this year, about $1 billion will be the 2024 number. You start to like tamper down unless you're like launching new products. So why is a 20% for 5 years, 8 years, whatever it is? Why is that the right number?
Yeah, let's talk about growth, and this is really going to be drilling down to like why it's just so poorly managed, right? This is a network and this is again why I talked about the Instagram. What if they were not monetized yet, right? They're just going to ramp up really rapidly. So here we have Reddit. It had 267 weekly average users, but half of that was United States, 131 United States users. And I know that Facebook has 272 million US and Canada users. They're already at half of Facebook, but the average revenue per user for their US user space was $5.51 in the latest quarter. Right? It's incredibly low, right? You get Snapchat at $9, Pinterest at $8, Facebook at $68. Just this eyeball thing. You look at Reddit. It does not make sense for Reddit to be like half of Snapchat monetization long term.
Why doesn't it? Because my understanding is Snapchat has bigger engagement, right? And if I said I was at 1 billion users and you were at a billion users, but my users were doing a minute and your users were on there for 2 hours, obviously you'd have better monetization, right? So my understanding is Snapchat, I think it's like the average session, it's like 28 minutes per a Reddit user versus like 45 minutes per Snapchat user, if I remember that correctly.
So it depends on which website you use, but this is surprising. Reddit engagement is very strong. Snapchat's 30 minutes, Reddit's like 24 minutes. Facebook, Instagram are 33 minutes. It's very, very close to Instagram, Facebook, Snapchat.
I guess my question would be, so Snapchat, let's just use those numbers. Snapchat is 20% more engagement per user, right? So that would You just said 30 and 24, right?
Yeah, 30, 24.
So that would be about 20% more ARPU just from the engagement difference would be my expectation. Now, we haven't talked demographic differences and everything with something. But then the other thing is, as I mentioned earlier, Reddit is a text-based advertising company, whereas Snapchat is video. And I would just imagine that Snapchat video is much more suited to both brand advertising and higher monetization. You know, like a YouTube video gets more CPM than a Spotify video. And part of that is they have better data and everything. But a big part of that is also YouTube is video and Spotify, not Spotify video, Spotify's audio. Video gets more than audio, gets more than text, is my understanding. So
historically, Reddit has not made enough, right? And they historically are a text-based advertisement. But over time, I don't see any reason why they shouldn't be having this Instagram, Facebook model in terms of advertising. Because remember, the idea here is their data is much, much more valuable in terms from an advertiser point of view than a Facebook, Instagram. Reddit, like in a world like in a post-ATT world, the younger people using Facebook, Instagram, you kind of know what they want, but not really. With Reddit, you know exactly everything they want, right? They're joining everything. They're searching specifically for what they want. They're going to search for baby clothes reviews on Reddit, not Instagram or Facebook.
Baby clothes reviews, I do understand that, but one of the nice things about, and again, I hate to bring it back to Instagram, not all of Facebook, but Instagram, when I look, like it knows, hey, Andrew's really, I mean, the advertisements are just very good. You say they don't have specific data. I will tell you, like, I almost buy everything that pops up. I'll go grab, they got me with instant overnight oats, which I really like. Like, they're really effing good. I can't think of any place that's got me to buy more off advertisements than Instagram.
So I forgot to mention, yes. And I agree. I buy a lot of stuff from Facebook, Instagram. I am embarrassed to say myself. However, let me ask you, did you allow Facebook, Instagram to track your activity outside your apps before or even now?
I don't think I do.
But how about before?
Before ATT?
Yeah. Probably, right? It's the default. So they have that data on you already. This is important. They already have that data on you already. But with the newer generations, they won't. The newer generation, from an ad generating perspective, it's not going to be like you, where they kind of know what you've already searched for before. And
I hear you. I don't know. Like, because they do have the data on just what you watch, and the data on what you watch, especially on something like Instagram, is pretty powerful. I'm going to have to wrap this up in a second. I guess you mentioned a lot of bear points here. What do you think the biggest misperception, the biggest variant view between your bullish thesis on Reddit versus the average person that has kind of reached out to you on Reddit, the average I don't think tons of Wall Street covers Reddit yet, but the average, what do you think the biggest misperception is?
Well, definitely there's many, and unfortunately, I guess you said running out of time, but as you mentioned, the 20%, this idea that, okay, they're only at 20% right now, so it should decelerate. In general, I will agree with this argument that numbers should decelerate over time. It's very hard for them to accelerate. But the idea here is, they look to be extremely under-monetized. You use the Reddit platform, the advertisements are very weird. They're extremely weird. You're like, why are they here? Why is it this one? And there's not enough good advertising there.
But isn't that speaking to issues with the platform? Like, I look at Twitter, right? The Twitter, particularly post Elon, the advertisements are bonkers, like literally bonkers. I'm getting advertisements for, it's a lot of politics ad, but getting advertisements for a lot of, you and I talked about them before, adult content that, I'm fine with adult content, but it's adult content that certainly wouldn't be suitable for me. And, it probably wouldn't be suitable for 95% of the population. Like, the issue with Twitter is a lot of now there were platforms issues and everything, but advertisers just don't want to be there anymore. Reddit, like, they do have some issues where it can get kind of toxic on Reddit. It's not 4chan, but it can get kind of toxic. So you've got brand standard issues. And then a lot of it is just like, look, again, it's a 20-year-old platform. If you're saying, hey, the advertisers on there are weird, I'd kind of say, hey, they've had 20 years to get there. And a lot of the brands, like, they either don't see the return or they just don't want to be associated with some of the Reddit content.
I mean, it's always possible, and that's definitely going to be the risk. But I'm not viewing that as a platform issue, but more just historically management has not executed kind of issue. That's how I'm viewing it, and I'm viewing it as Reddit should be probably doing an ARPU already right now. If we had a Facebook team at Reddit, I I wouldn't be surprised that they should be already at $20 ARPU for the US. Okay. Or if not higher, they should.
What's an example of a social network that does around $20 in ARPU?
Well, unfortunately, there's just Facebook, Snapchat, Pinterest. So there's not going to be many that.
That's fine. I was just wondering if there was. I'm trying to just like baseline it against something else that does, $20 in ARPU.
Because you got to remember, a lot of the Facebook ARPU is also coming from pricing. It's not necessarily just putting more ads. They're also be able to charge more for the ads because they've proven, the ROI is there. Okay, there's a lot there that is on the execution, but that's not platform. That's management, and that's what I'm saying with Pinterest.
Well, you say that's not platform, but this comes back to my Instagram gets me to buy stuff, right? A lot other advertisers don't. Like the pricing is because they can go to people and say, I looked at several other tech stocks with advertising, and advertisers questions the returns, right? They question the returns, they question the spend. Just think about TV advertisements. Every time there's always someone takes over and they say, oh, I don't know if I want to do TV advertisements. I don't see the return. Instagram, it's literally like they have pricing because they say, hey, I show this ad to 10 people. 4 people click, 2 people buy. We can show you the data. Like we're going to charge you $20 for this ad because you get 400 revenue. I don't know. This has been really fascinating. Yeah. Go ahead. Last thing.
No, but my point here is but is the way one uses Reddit versus the one uses Instagram. Okay, they're very similar. If not, and I could argue there's definitely people who use Reddit way more engaged than in Instagram, Facebook. The fact that Facebook, Instagram have that higher ROA on the ad, it's not necessarily due to platform in that case. It's more due to the management and that they have done a better job monetizing, would be my view. So I'm expecting.
I asked you what your most differentiated view was, and I would just say, based on I am obviously no expert on the company, but based on my read of other people, I think your most differentiated view is how mismanaged Reddit is, because I think most people think the management team has done a pretty good job here. And, I saw some people saying the CEO owns 25% of the stock now or something. He owns a lot.
No, he does not. He does not, because he's a co-founder.
I think it's like RSUs or something, right?
No, it's not even. It's very minimal, because he had sold the company for $10 million, and then he came back. So he's not a typical founder CEO. He owns very tiny amount. There's some private equity. We hadn't got to it, but a lot of private equity own a big stake in it. You got Advanced Magazine Publishing owns, was it like 40% of the company, and then Tencent owns 10%.
Yep.
And then again, just pointing out, but they did not sell in the IPO is something very curious to note. That all these companies, very highly concentrated positions in the company, they do not sell anything in the IPO. It's kind of interesting.
A quick disclaimer: nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.